Hey everyone, welcome to part two of Stepping into Wealth, the M4 Principle. What the heck is the M4 Principle? These are the four things that everyone has to consistently do to become wealthy and to maintain that wealth. And they all happen to start with M. These are four top level strategies. What are they? 1. Manage money. 2. Make money. 3. Manipulate the tax code. And 4. Multiply that money. Last week we talked about managing money. This week we're going to talk about making money. Well, Roger, I already make money. That's great. Do you really make money? Or are you just making a living? There is a huge difference, as we're going to see today. So let's jump right in and go straight to the whiteboard.
So last week we talked about managing money. And the difference between making a living and making money is basically how you're managing your money. Now, to get over here to making money versus being over here where you're just making a living means that you got to manage that money. And what are you managing? You're managing first your burn. All right, that's how much money you spend every single month, regardless of what you do. Managing your debt. Okay, when you are just making a living, you can't cover your burn, and you usually have to use debt to pay for the necessities of life. We don't want to do that. All right, so how do we move from here to here? How do we get the money? Well, guess what? It's the same way that we're going to move with making money. So what you have to do is build ordinary income streams. And those are going to come primarily from three places: W-2, a side hustle, and eventually full-time business. Now, well, Roger, why can't I just go straight into full-time business? I hate my boss. I don't want to do that. No, don't do that. We don't ever walk away from an ordinary income stream, especially considering all businesses have this thing called overhead. That's money that they have to spend whether they make a dime or not. And if you quit your W-2 job, oh, we got problems. We got problems because now your burn just became the largest component of the business's overhead. Guys, either your business will starve or your family will starve. Take your pick. It is better to keep your full-time employment in the beginning and start your journey with a side hustle. Now, there's a few things that you should know about going into full-time business versus W-2. Number one, you're actually more likely to become a millionaire over here as a W-2 employee. Well, Roger, I'm not making that much. Well, there's some more to it, okay? You're an employee of a publicly traded company. Okay? So if you are one of those that work for Amazon or IBM or Apple with these wonderful things called non-statutory stock options, you are more likely to become a millionaire staying in your W-2 job. The other thing you should remember, businesses over here, 47% will fail in their first 5 years. I've been in business 22 years full time. I'm one of the lucky ones. That 47%, that really gets scary coming into the 10-year time frame, because that's more up around 75% of all businesses fail. That's not a good thing. So what do we want to do? We want to stay employed, and we want to start a side hustle. And what's that side hustle going to be? Well, it could be any number of things. One, you might have a hobby that can be turned into a business. Or you might have an inclination to get into real estate and you go take a couple of classes and you flip a property. Now, you're not going to do some great big sexy rehab that sounds so cool and you're going to make $100,000 first time out. What you're going to do, we call lipstick on a pig. You're going to go in, you're going to splash some paint, put down some carpet, and make $10,000 to $20,000. Don't want to flip property? Fine. You know what? You could always deliver pizza or come up with a second job, or maybe you could moonlight. Let me tell you about my oldest boy. He is a IT security specialist for a large publicly traded company. He also works for who? For dad, doing my IT. That's his own little separate side business, his side hustle, building some extra money, because one day he wants his own full-time business, but he knows good and well he's got to stay over here in W-2 land right now. Okay? So you're building your side hustle. You got a nice little income. Now, you come down to a decision. Do you want to go full-time business, or maybe do you want to go another route? So let's talk about what the other possible routes that you could go are. Number one, if you're making a whole lot of money over here in your W-2, let's leverage this. What are we leveraging this for? Well, based on those earnings, we can get loans, and you can get rentals. You can get crypto. You can invest in syndications if you qualify. You could invest in limited partnerships, meaning you can be the money guy while somebody else does the work and flip some property. Okay? All great things to do. Leverage the W-2 income to be able to do all of this stuff. Now, Roger, I can make more money now in my full-time business. I've survived the first 5 years. I've built a nice nest egg. I am ready for this. Okay. I got some rules. Of course, Roger, you have rules. First off, when it is time to jump, the first question is, who's jumping? If you are married, take a good, solid look at who should be running the business. Should it be spouse one or spouse two? Generally, it's the spouse that makes the least amount of money because we want to maintain the larger salary. I prefer it that way. It doesn't always work out. Second thing, are your reserves in place? If yes, we can go to the third one. How much income does that part-time business need to be producing right now? As a minimum, here's my rules. Ready? The income should equal your salary at your existing W-2 job plus the value of your benefits plus the payroll taxes that your employer pays on you that you forget about. Okay? Plus 20%. Now you're ready to jump. So to keep it simple, let's say you make $100,000 and the value of your benefits, your insurance, etc., is about $20K. Your payroll taxes are about $8,000. That, ladies and gentlemen, is $128,000 times 1.2 is going to bring you to about $156,000. So you have to be making $156,000 in your side hustle before you move to here. A lot of decisions to make, guys. Now, Obviously, there are more ways than one to do it, but I want to tell you a story. Okay. I had a fella that came into my office. He was a client at the time, and he said, "Man, as soon as I leave here, I am going to turn in my notice." I said, "Oh, wow. Tell me about it." He said, "Well, I've closing on my first." And I said, "You're closing on your first? So this is the first time that you've done a deal. So how much are you going to clear?" "Well, I'm hoping to clear." "Well, what do you mean you're hoping?" "Well, I'm closing on the buy." I said, "Whoa, whoa, 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 time out. You are closing on the buy and not the sell. How much money do you make in your W-2 job?" "About 145,000. "And does your spouse also work?" No, she's a homemaker." "So you're about to walk away from your job when you've never made a dime in income, and you are the sole breadwinner and have all the benefits. How much money do you have in reserve?" "Well, we got about 20,000 in savings." Maybe it's time to rethink. Guys, a lot of this is common sense, and some people get so excited about making money they do foolish things. Make a plan, be laser focused on that plan. Don't just throw sand up against the wall to see what sticks. Okay? Let's go back to away from the whiteboard and we'll close this out.
There you have it, gang. I hope you've enjoyed today. Last week we managed money. This week we talked about making money. Next week we're going to talk about manipulating the tax code. Until then, Roger out.